today we are turning the tables and have a host on the hot seat. Hi, Priyankar.
Hi, Sindhu. It's good to be on the other side of the table for once.
Now, Priyankar is a bootstrap founder himself. He founded a website in 2006, and since then, the startup has redefined outsourcing, real estate, accounting, and related services.
Right. So I'll give you two examples. I think we are primarily a service-driven company, so my examples will be primarily the services or the solution side.
You're also the CEO, you're also the janitor. So how does it work, and especially when you're bootstrapping? Zoho, Zerodha, and Fusion Charts. What do these startups have in common? They are bootstrap startups and have scaled to great heights. Navigating the complexities of building a business with minimal capital and resources demands careful consideration of various factors. Despite these challenges, bootstrap businesses have defied the odds, scaling and growing against all expectations. The founders behind these successes have poured their hearts and souls into bringing these businesses to life. But what does it take to build and scale a company with limited resources? Welcome to another episode of Unicorns vs. Cockroaches, the podcast that celebrates the spirit of entrepreneurs who have built successful businesses without significant external funding. I'm Sindhu Kashyap, and today we are turning the tables and have a host on the hot seat. Hi, Priyankar.
Hi, Sindhu. It's good to be on the other side of the table for once.
Now, Priyankar is a bootstrap founder himself. He founded a website in 2006, and since then, the startup has redefined outsourcing, real estate, accounting, and related services. It's based out of Delhi and has an office in New York and has a team of over 300 people and is a dedicated partner for real estate financial services. They have operations in US, UK, and with Canada-based firms and have helped them reduce associated costs by close to 40%, and all this while being bootstrapped. So Priyankar, now that you're on the other side of the mic, we want to take as much advantage as possible.
Happy to be here. Yeah.
So I want to start with asking you, how did you do it? What does it take to build a successful business from scratch with minimal capital?
Yeah, the single most, important attribute I feel, and I've thought over it for a few years now, is perseverance. That's the single most defining factor for an entrepreneur. So it's taken a lot of perseverance, it's taken a great team, some good luck, and a lot of support from our customers to reach here.
It brings me to a very interesting point. You did say there are struggles, but then it also understands what does it take to build a successful business from scratch, because I understand you come from a background of consulting and that to a very, very prominent consulting firm, but you are building everything from scratch. I remember a founder once telling me that you're also the CEO, you're also the janitor. So how does it work? And especially when you're bootstrapping, how did it take you? What was your secret sauce?
So I think, I've thought over this question quite a few times, and even in my discussion, my peers, and some of them run very successful companies themselves. And I think one of the single important thing which I believe entrepreneurs should have is perseverance. I think that perseverance factor is kind of the single most important factor, I would say, because there are going to be roadblocks, there are going to be challenges, and you will not always have all the answers. So when you have perseverance, you can tunnel your, you can basically chart out your path with that perseverance. That's one. Second, I think there is also this entire thing where you have to juggle many hats. It is not going to be that you're only going to be in a particular function, especially in the initial years of the company. So that flexibility which you need, in terms of sometimes you're looking at finance, sometimes you're looking at marketing, sometimes you're looking at operations. So you got to be juggling different hats, and I think that's one thing which is kind of, important. The other third thing which I think is quite important for a bootstrap startup is that you look at, and probably even for wider startups, that you look at this as a win-win situation, right? When you see a situation, what does it take for the other person on the other side of the table to win? And what does it take for you to win? So if you start seeing things as win-win and try to figure out solutions which, kind of address your customers, your employee needs, your channel partner needs, then it kind of enables whatever you create to be a lot more durable than something just being transactional. Because if it's just transactional, then sooner or later, that particular transaction will break.
Right. Could you give me an example? Were there some instances where you personally as a founder felt that this is the best product I've created, but the market had different ideas and views? And did you have to maybe tweak, change, or maybe even pivot your ideas? And how does that whole process work? What is the thinking that goes behind this understanding? Because at one point you're very close to your product and your company, but you also have to distance yourself. So how do you build across that?
Right. So I'll give you two examples. I think we are primarily a service-driven company. So my examples will be primarily on the services or the solution side. So one thing which we initially, when we started the company, the vision was to kind of be a preferred, accounting services or financial services provider to companies across the globe. Because the logic was very simple that everyone needs accounting. We can do it cheaper, more effectively from India. It was very simple template initially. But when we went through that cycle, we realized that, there are a lot more roadblocks in that particular part because there are customer concerns. You need to understand the industry well, remote working, all of those things, right? Then that solution or that vision initially, which we had, did not pan out well. And we then had to kind of take kind of narrow it down to specific industry, which in this case was real estate. And the more we went deeper into it, there was greater customer acceptance because we could speak the same language. That's one example. The second one is that I've always been passionate about helping small, medium, businesses, and that's something which has, apart from just the business part of it, it's just, kind of seeing companies evolve has always been very satisfying. And one of the services which we launched towards that was, this entire service of financial reviews and business plans, where we were helping small, medium businesses figure out their finances, build business plans for investments or for loans, etc. We realized that service, even despite it being a high quality service, it was very difficult to do it remotely. It was a high touch service. So because of the remote factor, we could not deliver on that service on a consistent basis. So I had to kind of reiterate it, and we ended up just kind of reducing our focus on that area.
Priyanka, I want to ask you, how easy or difficult are these decisions when you're a bootstrapped founder? Because I'm sure a lot of our listeners are going to be bootstrapped founders. So I want to understand how easy or difficult are these decisions? Is there mind map, so to speak, that you follow? Does that work? I'm sure it works differently for different founders, but personally, how does it work for you?
Right. So I think when you view some of these decisions, right, you got to view from a dual lens, right? You got to see what is suitable for the company, in the medium term or aligns with the overall strategy for the company versus what the short-term need is, right? And often we tend to give too much weightage to the short-term need, and what starts as a very kind of a compromise or a short-term commercial decision then kind of overrides the entire strategy itself. So for example, if you have a customer, which is who's engaging you, but it's a very high-touch customer, the margins are very low, right? You continue still with that customer because there is business there. But often when you see from the vision of how much time and ROI you're spending on that customer, what is the kind of, time and effort which you're spending, what is the kind of ROI you're getting, then that decision becomes clearer that, okay, if that investment was not there in that customer, you could use it, in other services or other custom, kind of improve your focus on some of the other areas, right? So these decisions have to be looked in a dual prism, like what you want to overall look as in terms of your strategy for the company versus what is short-term needed. That's one. The second, it is also, I tend to view as what is, are you a king of one area or are you jack of all trades? I definitely look at decisions in that kind of area. And I do increasingly believe that in today's age, specialization and especially for a bootstrap company to identify that niche and kind of really own that niche, right, is very important. So that alignment really helps you in some of these decisions, because if it is not adding to your core proposition, then you need to take that decision whether to kind of remove that service from your area or remove that particular investment from your business plan.
So, coming to that, where you did speak about, part of ties up to strategic thinking. What are the challenges of that, and how important is it to make these strategic decisions early on? Because companies are also growing, things are changing so fast, especially in today's landscape. How is it important to plan early or make these very, very strategic calls early on?
So I think that's a tough question, because it's a tough decision also, because sometimes if you do it too early, you have not figured out the market itself and you may have taken a wrong call there. But I think one definite thing is that if you see a particular area working well for you, right, you need to have a fairly good sense of what is the overall depth of that particular market within, let's say, a couple of years of working. 2-3 years of working should usually give you a good sense of what it takes to sell to that customer base, what is the depth of that market. That is one. Second, is it possible to create some kind of specialization or defensibility in the business if you are in that area? If that area is unique, but everyone can get in and it's easy to build a business in that, then that uniqueness will not last for long. So some of those decisions have to be taken. A good ballpark number would be that after the first 2-3 years of working, you should have a clear sense. Now, this is for a services-based business, but if you're in a very fast-changing business, it will probably be earlier, right? So that would be there. The second thing would be that once you've decided on something, right, and that decision or that vision has evolved, it is important to test that vision every once in a year at least, to see whether you align with that, whether that's what was your original proposition is still valid. Because sometimes the assumptions which we have, right, they also may not be valid a few years down the line because, the industry is changing, technology is coming in, things like those.
Speaking of the changing landscape and the growth, the kind of pace in which technology is growing today, I think you need to keep up that itself I feel is a very conservative estimate. Every month is sometimes I feel that itself is conservative. But there is also the flip side. Many people believe it's tough for bootstrap businesses to grow that well. There is this whole idea and a common belief that bootstrap businesses have a slower growth cycle, slower arc of growth as compared to externally funded startup. Now, how true is this? And added to that, is this the choice that the founder has to make at every stage, that whether they have to choose to bootstrap at this point, I will continue to bootstrap. It might be slower, but it's good. And then tomorrow I can always raise funding. And then again, is that kind of a decision, or are there some steps that you need to keep in mind?
Right. So, both of the questions, I think the first one I'll take, first. When you look at a bootstrap growth versus venture-driven growth, I think it's important to look at how sustainable is that growth, right? So usually a bootstrap growth is not driven by just infusion of capital. It is driven by, organic growth of the business or, by the underlying strength of the business model itself. Whereas in many cases, a venture-driven growth may be just an infusion of capital, which is resulting in discounts or, heavy investments, and which is resulting in the initial spurt of the growth. But then you see a plateauing happen. So the short answer is yes, the pace of growth is higher if you have a venture-funded company, but the sustainability of the growth is generally better in a bootstrap company because you are able to, it aligns with your business model rather than just, a infusion of the capital which is there. And the second thing here would be that the search for growth, for exponential growth in some of the venture-funded startups, right, also leads to a lot of pivots, which often, everything in business is not just a function of the capital which you put in, right? It is also a function of certain time where markets need certain degree of maturity before a solution gets accepted, right? So there is a certain lead time before a solution gets accepted. And often, if the initial results are not good, you may pivot too much too early for that particular experiment to be successful. So that's one part. The second is in terms of how much, whether we need to be between funding versus bootstrapping. I think we don't have to be fundamentalist about that. Ultimately, these are only modes of capital or growth. One of them is internal accruals. The other one is external funding, right? So I would evaluate on the basis of what will the capital bring to the table, whether it will lead to, just additional marketing budgets, or are you able to kind of, using that capital, maybe acquire a technology or do things like those, which a normal bootstrap company may not be able to do. So if you figure out what the business needs, that is the first question. And then the source of capital is only the last question which should come in there, because capital follows business model and not the other way around.
That's a very, very strong point. Capital follows business model. But, speaking of capital, you also are an investor yourself, Priyankar.
Right.
How do you think you being a bootstrapped founder has impacted those investment decisions or impacts those investment decisions? Either ways, how does it define your investment choices and decisions? So let me put it that way.
Right. So I think there are two aspects to the investment which we look at. One is, if it's like you coming in as an angel investor or as an LP in a VC fund, right? There the entire model is around businesses which can scale up quickly and fast. So there is that model which is there. However, even within those, because of the bootstrap nature of the, of my experience, I tend to look at what is finally, one, can we reduce the business idea into simple layman terms? Can you write it down into a single page? If it's too difficult to explain, and a lot of time the potential synergies or potential benefits are all those which are not, which are some which are very intangible, right? Whereas if it's not solving a very clear tangible problem, right, then it becomes difficult for me to fund a business. Something which I should be able to clearly understand in layman terms. I think I see that very clearly. The second thing which I would see is what is the kind of cash flow cycle. So I usually prefer investing in businesses which have more recurring revenues rather than lump sum revenues, because I believe that if there's recurring revenues, even if the business has lower scale, there's a greater chance for profitability and hence a return coming out of it. Versus if it becomes a scenario where it's only, on one side of the roll of dice, you have a very big win, and on the other side, you have a complete failure. Right? I don't like those dualities. I prefer investments which are where winner does not take it all.
Yeah, that's true. Coming back from your conversation as an investor to now being an entrepreneur, when you talk to any entrepreneur, you realize that their journeys are filled with a lot of defining moments and defining aspects. They might not realize that now, like they say, hindsight vision is 2020, and much later you realize that, this was
Right.
this defining moment in my startup. When I talk about OHI, looking back, what would you call are those defining moments and why?
Yeah, there I think a few moments stand out. I'll kind of cover them, but I think one of the moments which really stand out to us was when we decided to kind of really focus heavily on one vertical, and that was not an easy choice because we also had to, for some clients, we gave up the relationship. We said we won't work with you because that did not align with our overall relationship, overall vision for the company. So I believe that that entire trade-off which we did, where we focused on one vertical, went deeper in that, that was a very key decision and kind of a key deciding factor on our growth in the later years. So that was one important moment. The other important moment, I think, would be where we started stressing a lot on kind of grooming our own talent versus acquiring it from outside, especially at the middle and senior levels.
Yeah.
So that decision was something which was driven by the fact that, when we look at typically an MBA course, like what we had seen, right? One of the things which is usually very understated is the ability, the loyalty of, it's partially loyalty factor, but partially factor where you see that there is a certain alignment of values of the employee and or of the team and the company, right? I think that alignment, where we saw the alignment, I've always believed that intent is something which can't be taught. Everything else, broadly can still be taught. So if there is someone where we feel that because through an external training, external grooming, more coaching, that person is able to go to the next level, right? We would always back someone internally versus bringing them from outside. Generally, that is, I think, one of the decisions which created a sense of, I would say, strong culture within our organization, where we've had one of the highest retention rates in our industry.
Wow. These are all defining moments, but they're also valuable learning moments. And I'm sure every founder has lessons. What are your valuable lessons that you have learned in your bootstrapping journey? And bootstrap founders, I think, have much, much more harder and deeper and stronger lessons. So what were yours, Priyankar?
I think one lesson which we learned, quite early, I would say it was something which was a part of our founding values was that we, as an entrepreneur, and as someone who leads the company, your responsibility is not just financial numbers, your own profitability. I seriously believe that, we are kind of a trustee for the employee security also, in job security and some of those things, right? So we take some of those things very seriously. We've been very fortunate that we have never fired a single person because of economic reasons. It could have been because of performance or things like those, but not because of economic reasons. So I think that is one of the core value systems where we take some of the decisions very seriously in terms of even scaling up. And, it has to be with understanding that tomorrow, if few months the business does not do well, we should not be, we don't have to then fire them to kind of sustain our operations. I would rather avoid that situation. So that's one thing. The second thing, I think, which is been a part of our strong value system has been integrity. I think that's one thing which we've learned very clearly throughout our journey, both integrity to employees, to customers, to teams, everyone, and that I've seen that often when we kind of place it on the table, people tend to take it seriously when they know that the company takes it seriously. So for us, that is non-negotiable. Performance is one. It can never overshadow the integrity part. And I think that is something which our clients also appreciate, because we are always, even when we propose a solution, it is not with a way for garnering maximum sales from the client. It should work for the client and it should work for us. So that integrity is something in our solution that is a core value which comes which is a part. And lastly, I think one of the core other third value would be, and which I kind of alluded at the beginning, is look at situations as a win-win thing. That if it works for every, see it from the other person's perspective and not just see it from your immediate gains. It doesn't mean that every decision which you take will be liked by everyone. It's not a popularity contest, but it means that when you take a decision, in that decision making matrix, the other person's concern should be a factor.
Yeah, Priyankar, but you made a very, very interesting point. You said we never fired anyone for economic reasons. We try to anticipate and make those things. But if anything, 2020 taught us that, nothing in certain aspects of the world are not in our control. Pandemic happened, and these decisions are harder for strapped founders. And when the market has those sudden shifts, or even now where the market conditions are really tough, it's really hard even for well-established companies to retain employees. How do you do that? How strapped founders do that? And how have you done that? What has your personal experience been?
Right. So I think there are a few parts to it. One, it is, this works in a context where you've figured out your overall business model, right? And you know that, okay, there is a certain kind of revenue flow happening. So that means that, it all boils down to also financial prudence. When you take some of those decisions, you need to be prudent enough to know that if it goes wrong, you can still sustain that cost for some time at least, That's one. The second is that if there is no possibility there, can we look at a midway solution? Often firing may not be the only solution which may be there. Sometimes, people take salary cuts or, salary freezes, for example. That is another option which could be there. Third, if that has to happen, then what does the company do and how it does is very important. I think there is, I've seen news and cases where people have been fired on Zoom or, in a very kind of a non-sensitive manner. I think that is something which, if that has to be done, then it has to be done in a certain manner. But I think firing in general has to be the last case which is there. You also often may have a situation where someone may not work in a certain role, but may work in another role. So those options have to be used before just using firing as a default option.
Right. Last question for this episode. How do you view hirings then? Because if firing is the last resort, hiring becomes extremely important. And so far, in all my conversations with all my founders, they don't say product is a challenge. They don't say market is a challenge. They don't even say clients are a challenge. What they say is a challenge is finding the right people. Building the team is a challenge. As bootstrap founders, that luxury of hiring extremely expensive resources is also very tough, at least in the very early stages. So how do you work around hiring, building the right team? How does that work?
So hiring has two parts to it, right? One is the capabilities or the expertise part of it, which is the more quantitative part of it, if I may say. The other one is the qualitative part of it, which is more in terms of, the nature of the person, the personality of the hired member. So I feel that, in our case, we tend to look at two things. One, we tend to look at what has been the past, experience in terms of also the struggle which the person has gone through. Is there any struggle? Is there any data point which shows that he or she has pulled up his or her shocks and really kind of delivered in a pressure situation? Now, I think that is one important part which we look at. The second, which we want to look at, is typically, and which is slightly difficult to look at. It is only evaluated to what is the integrity of the person, right? And that there are ways to evaluate that. You can get down to getting a sense of that. So that is the third part. The third is a bit cultural for us, whether he or she would fit in with our kind of culture, which is there. So we as a company are slightly more understated as a culture, so we're not very, typically we look at the average HI team member, he would come out as very unassuming or, very understated person. So I think that is some of those cultural aspects are very important, which is there. The final thing in hiring would be that you will always have some hires which will not work out for you. Right. The key is whether you can learn from what's worked and what has not worked, and it goes back into the entire hiring cycle. So I think that is thing which is there. What's also worked well for us is as we've moved hiring further downstream, to our managers and senior managers, they have a fairly good sense of what is the company's culture and what we are looking for. So that uniformity of language, of understanding is very important. So it's important to coach those who are interviewing on what the company also expects. Otherwise, you may have this situation where, the founder hires a certain kind of people, but those who are, when you delegate the hiring, then if it doesn't work well, it's a problem. We are about 300 people, till about 250 employees, I used to do every single final interview, which was there. And then the last, I've had to kind of move out of that, but I've done that.
Basically, you're saying you ensure that cultural integrity sticks on for a long, long time. It trickles down to your next layer, and then it easily trickles down to the third and fourth and other layers.
Yeah. So there is a saying, it's a cliche, but it's very true, that culture eats strategy for breakfast.
Yeah.
I definitely think that culture is a very strong differentiating factor. And culture cannot be created out of posters. Culture is created out of actions. It is created out of actions at every level of the hierarchy. If you as a founder have a certain vibe and certain vibe, I mean certain way of working, but if the team below you does not follow or adhere to that, then a culture is not created.
Thank you, Priyankar. It was great talking to you. Stay tuned.
Yep.
We'll be coming with another episode soon. Thank you.
Thank you. It was a pleasure talking. Yeah. Thank you.